Hi, I'm Steven, co-founder and CIO at Quantamize, and you're watching the Quantamize Global Markets AM Preview.
Global stocks are rudderless this morning, in search of new fresh market catalysts to continue the 2019 rally. This is after the S&P 500 closed up a little more than 8% for the month of January. DWS Investments argues that U.S. stocks are set for an extended rally according to a value to fear measure. DWS compares the PE of the S&P 500 to the level of the VIX and suggests the S&P 500 VIX measurement may have bottomed in late December 2018 and may point to an extended rally for stocks. Over the course of 2018, the measure tumbled nearly 82% as the S&P 500 closed down for the year and market volatility increased. JP Morgan is arguing that investors shouldn't wait for analysts to upgrade estimates for stocks, as history shows that positive earnings revisions can sometimes lag the stock market by over a year. Now that's an interesting point I didn't know. JP Morgan uses 2016 as a recent example, where the market bottoms out in February, but analyst earnings revisions only turn positive near the end of the year. The bank argues that the current positive earnings cycle should continue in calendar 2019, fueled by continued robust economic expansion. That's a really fascinating observation. Low volatility may be a crowded factor, with the forward 12-month PE for the S&P 500 Low Volatility Index nearing an all-time high. Institutional investors continue to worry that the rich valuations for the factor group may cause it to structurally underperform the next time we see a sell-off in the S&P 500 stocks. 4Q earnings season for the S&P 500 to date has been better than feared, with 60% of reports beating top-line estimates and 75% beating earnings expectations. However, some market strategists point out that the magnitude of earnings beats is the lowest it has been in almost 7 years. The VIX is little changed this morning, currently sitting at 16.59, with VNQ, SPY, and HYG out of the money puts, and General Electric out of the money calls, some of the most heavily traded options in the U.S. pre-market this morning. From our popular stocks trending in the news segment, Clorox reports second quarter 2019 adjusted EPS of $1.40, beating consensus of $1.30. Clorox's second quarter 2019 revenue came in at $1.47 billion, in line with estimates of $1.47 billion. Clorox gives full 2019 EPS guidance of $6.20 to $6.40, in line with consensus. Sony reports a 14% drop in operating income to 73 billion yen, that's roughly $666 million. Sony's weak results came from weak PlayStation sales. Sony sold only 8.1 million PS4 consoles this holiday season, down from 9 million a year ago. Analyst comments have generally been negative, with Macquarie downgrading the stock to hold from buy. After the close today, Google will be reporting earnings. Google earnings should set the tone for tech stocks this week.
If you found this video helpful or informative, follow us on Twitter or subscribe to our YouTube channel. And don't forget to check out Quantamize.com for your full market preview for stocks, options, ETFs, and cryptos, and to find out what trades our AI quant models like this morning.